Reserve Bank has moved to increase the cash rate to a 12-year high of 4.35%, placing further pressure on borrowers. Joining us live is REA Group economist Angus Moore. Angus, good to see you. Thanks for your time. Nobody was hugely surprised yesterday to see the RBA decide to move rates again. Where to, though, from here? Is there any silver lining for mortgage holders?
Thanks for having me, Ash. Yeah, look, it's certainly not a big surprise given where inflation came in. It was probably a bit stronger than the RBA was expecting, and they'd probably telegraphed that it was higher than they were hoping for and that we could expect to see a rate rise as a result. In terms of what's on the horizon for borrowers, look, we might be at the peak. Markets are pricing in some chance of a further interest rate increase, but not, fully priced in. My expectation is we probably will see another one, maybe even more, depending on what inflation does. And it is really going to come down to what happens with inflation over the next few months. I wouldn't expect to see much this year. There's obviously only one more meeting to come in December. I wouldn't be surprised if the RBA sits pat at that meeting and then we see another interest rate increase in February when they re-meet again, have new updated forecasts, kind of looking at the year ahead on the back of new inflation data. And that will really tell us where the RBA is going to go.
Okay, and what does this mean more broadly for the economy, particularly for property prices? We're seeing records still continuing to be broken on that front.
Yeah, the property market's been remarkably resilient over this year. We came into the year expecting property prices to fall just on the back of how quickly and how far interest rates had risen. And clearly that's not what's happened. The PropTrack Home Price Index increased again last month by 0.4%, which, look, it's not record-breaking price increases. It's not, the sort of pace we were seeing in 2021, but it's still pretty solid. And what it means is that since the end of last year, so since December, prices are now up 4.9%. They've completely erased the losses that we saw last year. And in an environment in which interest rates have increased as much as they have, in which affordability is as strained as it is, the PropTrack Housing Affordability Index shows affordability has never been worse in the last 3 decades. And yet in that environment, we've continued to see price increases. It's pretty remarkable. That said, higher interest rates will be a headwind to prices. So, going into next year, depending on how much further the RBA has to go, that could start to slow price growth.
Okay, and when we delve into that a little bit further, are we seeing that across the country? Is there a stark difference between the trends in regional areas compared to inner city? What about prices on apartments compared to houses? What sort of trends are you seeing there?
Yeah, it's a great question. We are seeing a bit of a divergence, particularly between Melbourne, which is seeing a bit slower price growth at the moment, hasn't fully recovered the falls from last year, and Sydney, where prices have recovered remarkably quickly after it was, seeing really quite brisk price falls last year. Looking more broadly across Australia, we are seeing pretty strong markets in Adelaide and Perth. Both really didn't see a downturn in prices last year. They sort of largely avoided that as the RBA started raising interest rates. And they've continued to kind of that strength into this year. Both are seeing price increases over the past year, up towards sort of 10% or more, which is pretty remarkable in this environment.
Angus Moore, really appreciate your analysis. Thanks so much.
Absolute pleasure. Thanks for having me, Ash.